Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
We've arrived at the key event of the week, the Federal Reserve's monetary policy decision. The interest rate is expected to remain unchanged, but we're eager to see what Jerome Powell will say about the rapidly evolving political and economic landscape. The US economy is facing two major challenges: inflation and a recession. The Fed's perception of which issue is the bigger threat will dictate Powell's tone. Inflation has been the dominant concern in recent years and is on the rise again, ensuring it will be a focal point. The economic slowdown has crossed a critical threshold, but the Fed tends to wait for more data before making any moves, likely indicating a wait-and-see approach. The Fed has the flexibility to cut rates by 0.5% if necessary, given the current relatively high level. Ultimately, we expect the Federal Open Market Committee to adjust its rate projections, indicating 3 rate cuts by the end of the year, which may reveal what Powell might leave unsaid. Unfortunately, this does not clarify how the market will react to the Fed's decision. It only highlights the uncertainty surrounding it and the future actions of major players. On the weekly chart, the price is testing the MACD line. It's a blue line on the graphic, signaling either a possible upward breakout or decisive downward reversal. On the daily chart, a divergence has formed between the price and the Marlin oscillator, raising further questions rather than providing clarity. On the 4-hour chart, the price appears poised, simply waiting for a signal. Even if we had advanced access to Powell's speech, it would provide little insight into the actions of major market players. As mentioned in previous reviews, the US economy seems to be more resilient in its tariff battles with Europe. We expect a medium to long-term strengthening of the US dollar, though we are uncertain whether the trend will begin today.
And now it's time for GBPUSD. Let's discuss it with Paolo Greco.
The average volatility of the GBPUSD pair of the past 5 trading days is 61 pips, which is classified as moderate low for this pair. On Wednesday, March 19, we expect the pair to trade within the range of 1.2934 and 1.3056. The long-term regression channel has turned upward, but the overall downtrend remains intact, as seen in the daily time frame. The CCI technical indicator has not recently entered the overbought or the oversold territory. The currency pair maintains a medium-term downtrend, but the strong upward movement continues in the 4-hour chart. We still do not consider long positions since we believe the currently rally is a correction that has turned into an illogical, panic-driven surge. However, if you trade purely on technical analysis, long positions are valid with targets at 1.3056 and 1.3062. If the price is above the moving average line, it's a sign line on the graphic. Sell orders remain attractive, with targets at 1.2207. It's a thin sign line on the graphic, and 1.2145. As the upward correction on the daily time frame will eventually end. The pound sterling appears extremely overbought and expensive. But Donald Trump continues to push the dollar into the abyss. Predicting how long this Trump-driving dollar collapse will last is challenging.
That's all for today. Wish you best of luck.